one guy said it right. He said something about, I think we'd be better with newspapers and no social media right now. Just newspapers. I agree.
I did see one take that was, I can't imagine 2008 was worse than this.
Oh, that's cute.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it's a shame that we don't have anything to talk about this week because it appears all the fireworks were last week.
Oh, how wrong you are. Plenty of things to talk about. This is a insane market, but I'm ever the optimist that I am, the positive guy. I embrace it fully. I've actually been through this before. This has happened before. It is not the worst ever. There's people getting hurt, as any market that happens in, a lot of uncertainty. But again, I think that your whole goal with this market is really to embrace it. That's what's worked for me in the past. Look, you're not going to do anything to change it. I see people complaining on Twitter. Really, I meant that's really low energy stuff. Actual people that are in the markets are going to be looking for these opportunities. Yes, you could be caught in a bad situation, undoubtedly. And that's not fun for anybody. But really, the people that are involved in the markets for real do see this in the commodity realm. And I would say that for the stocks too, that know what they're doing, definitely are looking for the opportunities. And it's not to say that it didn't hurt me a little bit. The first round of tariffs, I had plenty of bull spreads on when they were liquidating corn. And but you still pick yourself up and dust yourself off, because in 2008 this happened and created some of the most wonderful opportunities that you'll see in your lifetime. Whether that'll happen that way, it won't. It'll be different. You have to take it day by day. You're not going to change anything by complaining. And the world isn't against you. If you're a trader, I mean, you embrace this and you embrace the volatility. You might get hurt. I mean, you're going to want to keep limited risk strategies going, but still, these are good markets. A low grain price is not good, but what you got to look, what opportunity is this creating now that we have these lower prices? Because the guys that I know do well, that's exactly what they do. They laugh it off. I'm sure financially they're not laughing, but at the same time, what are you going to do about it? You can try to improve the situation, and that's where I think that you should be. I don't know why anybody would be anywhere else.
It is a good reminder that this is risk capital. It's not put your entire savings account into the commodity market.
No.
It's also a good reminder to don't even have your whole trading account in one trade, because keep some powder dry for this. Maybe you did lose, but if you had some funds to buy, there might be, or sell, depending on which side you want to be on. If you had funds available, even if you had a loss on what you had on.
Yep.
There's opportunity to make back that and more, potentially.
Yeah. And just recognize, there's opportunities in these markets intraday. I meant the cattle would have been impossible today, but I'm sure if you guys caught it perfect. Use options, use limited risk strategies. I personally like spreads in this kind of stuff. Option volatility really jumps. They get to be expensive. But then, the young guy that we had in here, Theta Farmer, he embraces the volatility. His particular strategy loves this volatility. I know guys that use this. Many guys use this. And it's maybe a deeper pocket strategy, but that's where they're comfortable. I like a long and a short on to kind of weather this stuff. So you're looking for opportunities in spreads. I am personally, I have guys that were looking at bear spreads and energies. They've worked well. The wheat corn spread I've talked a lot about has gone the wrong direction, but still is something that you track. It's like, okay, it was already a good deal. Now it's getting to be a better deal. Keep your risk limited. Or stay out of the markets totally. I have, unfortunately, hardly anything in my account right now for trades, just because I personally want to have less on when I go to bed at night than more. I'm not jumping in and out of stuff necessarily. I saw beans were calm today. I had some tight stops, and the short side thinking the China thing was going to be big deal. I think in the end I lost $100. I don't even know. Was up a few hundred. It was actually very quiet. So I recognize that beans aren't super volatile today. And I was there today, where cattle stops definitely would have worked, but they probably would have worked against you because it was just such a wide range. So know your markets. And if you don't, stay out of them. Watch. If you have a 401k, maybe you can avoid the market. Right. But I think you have something to say about that.
Well, I have a lot to say about the stock market, but it's more about what people are saying about the market than the actual numbers. I mean, this is sure the market was down a lot the last 2 days. 3 days. Sorry. I mean, I was discounting today a little bit, although the Dow is technically down at the end of the day.
It went up 1,000 points too.
Yeah. Well, I only watched the open and close. Just kidding. I was watching through the day. It was down significantly when the market opened, but point being that the people get, I mean, the things that are said are just crazy and on both sides. And if you sit there and are going to listen to that versus forming an opinion, and on top of that, from a market side, the number of people that I saw talking about the Dow dropping and were comparing numbers of points dropped instead of percentage, and having some realistic basis was just insane to me. And to me, that is manipulating people and not looking at the reality. Yeah, maybe there are significant things that need to be taken into account that caused this market to drop, but let's talk real numbers. What was the Dow in 1929?
Yeah.
648 points total.
Black Monday, down 23% in a day.
Yeah, but it was that 23% was like 100 points or whatever it was. I need to look back at it. But
the sign of the times. I mean, everybody tries to make everything so political. It's exhausting, and it's not going to help you in trading at all or hedging. And unfortunately, we get to see a lot of it in social media. They're just going to paint whatever picture they want. The last time this happened, which it's happened, the tariff when Trump did the initial trade war with China was not in the headlines because I don't know what was going on at the time. But it had the media distracted and they just simply didn't talk about the tariffs. Thus, the problem didn't exist. So they just paint whatever picture they want. It's really exhausting, boring. I don't follow any of it. I try not to. You see a lot of it spill over. And they'll cherry pick stats and both sides will make anything they want up out of whatever stats they can dig up. Still, that's a distraction to me. I really try not to follow it unless it directly is going to influence the price direction. But even then, look how unpredictable it was today. So just realize that's not helpful stuff, and it won't help your trading or hedging. It's really boring to read on Twitter. I dove in to see what the hubbub was today. You had to see a little bit of news. And it's really distracting. I would rather just see the actual news. And people do post that. And then there's people that post very good stuff. But overall, had it been even as bad as it was in 2022 or 23, whenever it dipped last time.
22, yeah.
So far. And it's just, I think that since 2008, people just haven't seen the real markets. And in the commodities we certainly have, you see just as many ups and downs. So you're used to this. It's just more, there's more gasoline on the fire right now. But we've seen many cycles in commodities where the other investors have always got what they've wanted almost nearly every day for 15 years with a couple slight setbacks. So it goes down and you hear a lot of complaining, and the markets just don't work like that. And it's going to be very unpredictable where they go for the next couple months. So I would say get comfortable with these moves because that's the way it's going to be.
Yeah. Well, and I think it's important to note that since we focus on the commodity side, it is just as easy to be short as it is to be long. Yeah. Versus, like you said, if you have a 401k, you have exposure in some way, and it's it's to the long side.
The call from my mother never fails. Every time the markets go down, the stock markets go down, she calls and to see how I'm doing, if I'm doing all right. And I tell her every time I do that, but you can be on the short side, and this is normal for us. And then next time the stock market goes down, she'll check in with me again to make sure I'm all right. But yeah, commodities aren't like that, including the stock market indexes. For me, people are more likely to be short than long a lot of commodities. But it does change with the market cycles. But for hedging, you're more likely a producer raising it and then short the market. That's how you're short more often than you're long, but not necessarily always the case at all. But I look for the opportunities. I think one that's really stood out to me would be the corn bull spreads. The first time the tariffs came on, you had heavy liquidation, heavy bear spreading while the funds were exiting 200,000 positions. There's still long 57,000. You've seen heavy liquidation again, yet that's the one bright spot. So what that is a divergence. This is the kind of stuff that you're looking for. It's meaningful if it happens for more than one day. You saw a divergence in the soybean spreads today, where July and May just simply did not want to go down. This is a little look into what the commercials might be thinking about this break, the guys with a little more information than you. And it's something to watch. This is again an example of what to be looking for is divergences in this, where you have the news, but the price action isn't matching it through heavy liquidation. And I just see that you just need to be very flexible and be on the lookout for stuff like this. So I see this stuff, then I'm going to contact clients. Hey, what do you think? And then we start planning about this, about what we want to do. If wheat keeps getting hit, this is what we're going to do. Maybe we're going to have price something for the wheat and corn. Maybe we're going to be looking at Minneapolis calls. Again, always just like your old football coach told you, just keep those knees moving. That was always annoying to me. I felt like I was moving my knees, but he often disagreed.
Knowing you in high school, you were not moving those knees.
Keep those knees moving. So you have to in trading. Well, that's your opinion, man. If the coach would have put me in, what would have happened.
But that bench was warm.
And I also shared the same exact number as another fella. We were both 76, so that tells you how highly they thought of me as well. But it was, that was an experience, the old football. Everybody told me I had to play, so I did, and I don't think my heart was in it. Yeah. If the coach would have put me in, what would have happened. It was, you just have to keep moving. The markets are going to do what they're going to do. I again, stay positive and look for the opportunities. 2008 provided tremendous opportunities. One specifically was the soybeans were actually very bullish that year. Everything liquidated down. July got under 5 cents under November, provided a wonderful opportunity to bull spread beans. And as soon as it calmed down, the spread bottomed, people were able to get in, and it was very easy. And that's the kind of stuff that I'm looking for now. Although I probably want bull spread beans, I'm just saying that things get out of whack when heavy liquidation happens. They're definitely liquidating their winners, cattle and gold, to pay for their losers. So you get a lot of misalignments in markets. If you're too early, it can really hurt you. Don't catch a falling knife. All these things are all very true. So be very careful in these markets and try to do wise things.
Well, speaking of beans, I've talked about a couple different options that I've been looking at, and let's talk about where they're at maybe a little bit, but because we definitely have some winners and losers. But I had mentioned the 940 in July, that was one that I was definitely keeping an eye on. I did not buy it. Wish I would have.
Your calls are on sale.
Yes. So that 940 went from, I think, when did we talk about it? It was 2 cents, and it's now, last trade was like 13 cents. So that's a woulda, coulda, shoulda, right? But yes, last week we talked about the $14 call.
Yep.
Yeah, that's like 3/8 of a cent now instead of 2. So it's definitely on sale. But if you didn't buy, you could always move down to the 12. But again, are we catching falling knives yet, or are we just monitoring trades? So
beans look like they were just going to get absolutely whacked, and I didn't have any puts on. I'm like, that looks too easy. Let's not do this one.
yes,
that's no fun.
That's I mean, I had that in everything. We talked about it in the office on Liberation Day.
Yep.
Well named Liberation Day. The market did not move that day, and you and I both chatted about some things. Are we going to put something on? Are you looking at anything? And I think we both decided to sit on our hands. And
yep. I said, this looks too easy. This looks safe. I don't want to do it. I'd rather fight for $250 all day long in something highly volatile and dangerous. That was my choice, and that's what I did.
No, I mean, the reality is it could easily just go the other way against you, right? Like, you're never right on all your picks as much as we try to be. And yes, there were some easy picks out there, but
I do like soybean options. Soybean options are wonderful, and I think they're going to, that's where I see a lot of opportunity as well. You could make the argument for both choices right now. One guy will call, and he will be talking about May puts. The next guy will be talking about September calls. I mean, people will see opportunity on both sides. And I do like that going into this, that we had beans very low priced. They've gotten even cheaper. Mm-hmm. And eventually the calls in front of a summer can't go to zero because you have all that weather that could happen. So even if it does move down, short of substantial moves down from here, the calls, it's hard to get a lot cheaper unless, like I say, we're going to move $1 down from here. So that's on my radar screen without a doubt, like you.
So I do have an example of a call, just the volatility of it, because it was one that I was watching.
Yep.
So I had watched the $11 May call just as a total flyer. Started watching that one.
Yeah, that's a definition of a flyer.
Yeah. Well, we had a big down day. What was the first down day? Thursday or Wednesday?
It's all blending in for me. Wednesday, really, probably.
And so I looked more at the 1080, and I watched the 1080 on, I know that was Thursday that I watched the 1080. Thought maybe, and that was at 1 cent, I think then.
Yeah.
Well, beans are down 50 cents from when I looked at it Thursday. That call is half a cent. So even though beans made a 50-cent move down, that call, because of volatility, is still worth half a cent.
Yeah, you don't have to sell me. I love cheap options in beans. Short time frames. I mean, obviously, you can get a heck of a deal. You have to be right in that time frame to some degree.
Not even in that time frame. Like, really, we got 18 days right now, so really 17 by the time anyone listens to this. That move has to be made probably in a week. Yeah, you don't even really have those whole 17 days to actually make money on that.
No, I still think the implied volatility, you'll hear called a lot of different things. The way they price them, they have that time period, and that's the way they think it's going to move, and they give it a percentage versus history. So I think that it's still very cheap in beans, and I didn't say put or call. I think they both are. That's why I like beans with options. It's just chronically underpriced at all times. I think the historical volatility is off. It seems like we're trading volatility from the late 90s, early 2000s, but it doesn't change for some reason.
Don't say that publicly, John. You're giving those market makers ideas.
The secrets are given away. Where corn is the other way. I mean, it just seems to be chronically overpriced, and I hope I'm using that word correctly there with the corn options. But it's always overpriced. It not that you can't make money on them, but you get a bigger bang for your buck in beans. There's a lot of politics and trade war stuff involved in beans that affect beans a lot more short term than corn, but it can work the other way as well. But that's why I like beans. I can like wheat, and I do like wheat right now. As a matter of fact, I'm tracking some Minneapolis wheat calls. I've had some good luck with the dryness in the past with those. Not so good luck with the liquidity of the option market in Minneapolis, but it's not impossible if you know what you're doing. And you got to, it's like the doorman. You got to slip them a 20 to get in that market. You don't get in for a hot deal. So guys that like to to bargain hunt, and they love the idea that they get wonderful fills. The Minneapolis options aren't that market for you. I meant
no, you're taking what they give you. I have a great story on that, but we're not going to share any more losers today.
Yeah, I like days where they're beating up wheat and they hate it, and then you like I say, you slip them an extra $50 bill, they'll let you in there.
That's right. What month do you watch for Minneapolis though? That's the question, cause especially with options, because I don't think anyone's even trading December yet, are they?
No, it gets to be tough in there. Ever since 2008, it blew everybody up in the option pit. I don't know what other story they have for you, but that's what happened. It was never very good. It got really bad after 2009. It hasn't really recovered, surprisingly, with the new contract coming on. The competing, it's not replacing the Minneapolis one on the Minneapolis Grain Exchange, which I believe is in Miami. I meant make it make sense. I think it's going to be a competing product. Well, I know it's going to be. And maybe a bunch of volume is going to come in that one. Who knows? Maybe they'll fail spectacularly. You just never know when you start new products. So I look forward to that. But still, you can get in that market if you know what you're doing. I like September personally. July can work. You want the summer growing season. That's why I'm talking the different months. But after the famous drought of 2012, I'm firmly in the camp to buy more time. I've told it. If I've told it once, I've told it 100 times.
Yeah, no one wants to hear.
They do. It's a valuable lesson. I choose September. I'm a September guy. As a matter of fact, if you had September calls, it would have literally forced you out at the high, or at least made you exercise in the futures, then choose whether you had to roll. And so I favor September, but you don't have the frost rally, the famous frost rally that never seems to come.
Right.
One of these years, though.
I will say I like September for wheat way more than I like September for soybeans.
Yeah, well, that's what makes a market. September, you'd have to go check the tape, but I just don't think there's a lot. There's October, which can be a very important time for soybeans. You do have that important month, but if I'm buying calls for summer, I'm buying it for the weather, not for some export thing in October. Seasonally, you do bottom in October, and we've seen some rippers in October. But if it's not working by October and it looks hopeless, I probably have thrown that option away and would regret it anyways.
Yeah, well, I think we both did that with November last year. We didn't really throw them away; they were profitable.
Yeah,
they just not nearly what they would have been.
Yeah, it was wild. It was a wild fall. I forgot about that. Beans rallying for $1.05 for no reason all the time. Yeah. And then falling $1.05.
So why do you like bean calls coming into spring? Because they can do that, I guess.
Yeah, I just like the setup. I mean, does the news get any worse than this? No. I mean, it can definitely stay this bad, but this is, if everybody hates it and it's running away, it's usually a good deal. Not always, though.
Well, tell me about these corn divergences. What are you seeing there? What's that telling you?
So the divergence is there was heavy liquidation. Grains were down a great deal. Corn's performed the best, so that's divergence number one. Corn didn't want to go down with everything else. Beans were certainly falling, and wheat was certainly falling, and they're net long corn. So they could have liquidated. So I think at the height of the worst for the beans, which would have been Wednesday night, corn was down 7.5 overnight. Then by shortly after the open, it was down 4. There's your first divergence. The second would be they're buying the front versus the back end. That could be a number of different things. Could be the commercial saying, hey, we're afraid we're not going to get corn. Bought at these prices, so they're using futures to buy it, and they'll get it delivered if they need it because they bought $460 or whatever it was, $450. Very attractive. But, hey, I don't think the farmer is going to sell it to me for that. So I'm going to own it on paper. That could be happening. It could be naturally tightening up, and it's just the natural tightening of the market that everybody's been talking about in corn. But it's diverging from the price action. Heavy liquidation, run for cover in every market, yet corn looks very good. One day doesn't matter. Oftentimes they're spreading long corn, short wheat, long wheat, short corn. They're unwinding stuff for a day or two. But now we're on day 3. Where it's looked like a completely different market that doesn't care. Take your cues off that. That's meaningful. Not one day's price action, but 3 days and 2 different divergences. They're both spreading corn pretty heavily. And corn is just outright climbing. But you do have the December 25 contract that honestly, he's probably picked up a few acres over this whole debacle. So you have cotton. If anybody was on the fence for cotton, which there probably wasn't that many guys, that went down limit for a couple days. Beans dropped 55 cents, So if there was a decision to be made, December 25 corn probably is gained acres. So you got a tale of two markets there: old crop corn versus new crop corn. And then metals. That's another that we were going to talk about. Metals. I really like that market. In the COVID, I think platinum liquidated down intraday. I was in Florida at the time, and I remember it being 674 or 47, and by the close, I think it was 750. So platinum's a market I'm very much watching, but it's also very tied to world economies. It's a manufacturing metal as well. So weak economies, weak platinum. Still, in the end, it's a investable metal, and it's a market that interests me when it gets in the 800s, which it did today. But the markets are very weak in the metals. Copper, what was that down? Pull up that chart. That's been ugly. The great copper shortage that we're supposed to have has, slowly worked its way up. It's erased all those gains in the last week, though. That's heavily tied to construction, heavily tied to the economies. That's a market that's getting whacked. That's also a market that I'm following now because it's getting killed. It doesn't mean jump in. It means, hey, if things stabilize, that's maybe a market that a guy could get involved in. That's an options market for me. That's the way I personally would approach it. But again, you're pulling the positive. You're looking for things that are getting out of whack here. You don't want to catch the falling knife necessarily, but you want to find ways how to get involved in these markets once you have some stabilization. It's probably not going to V out of here. I don't think any of these markets are. Do you think so?
I am actually curious to watch and see what happens. I certainly think any one of them can. And most likely, if they do, they all do it together.
Yeah, cattle's probably the most likely.
I have been surprised by the strength across the grains. I wasn't surprised by beans being way down Thursday and Friday. That was not shocking. But when corn did go back to green, I was kind of surprised that beans didn't pull back some. So that definite divergence there.
Yep.
But do they rip out of here? Not tomorrow. But man, if all of a sudden trade deals keep happening.
Yep. Wheat's another market. You have to keep your eye on that one. We'll be talking about it on the Insider all week. Wheat, which is going to be the subscription side of stuff. But
I'm going to share something you shared on the Insider from Friday, though, in that we're the cheapest for wheat in the world right now.
Yep.
Is that true?
It off and on, yes. We're there's obviously freight, but with the freight, yes, on paper, theoretically, we could be the source for wheat right now. But obviously, there's stuff going on. Japan's a big wheat buyer. We have stuff going on, but yes, when you start hearing that, that's generally where you start seeing opportunities. Nothing wheat likes more than right when it's competitive to get right back out of that zone really quick and not be competitive.
We don't like to be competitive in the world. That's why I was surprised to hear that.
It's his favorite thing to do, get competitive and then get right out of there. So on the Insider, I'll be talking with the people that are subscribed to that about wheat. I think that's a market that should be looked at a number of different ways. And that changes daily. Wheat had a good day today, but then cooled off. But still, it was, I think, like to what you were saying earlier, the reason why the grains maybe have looked a little bit better is they were heavily short wheat already, and there was nothing to liquidate. They would have to get more short, or people would have to, new shorts would have to come to nail that market. So that was already at attractive levels before this happened. Beans, same thing. They're heavily short. It was at a low price before this happened. And, you still, the world still will eat. You get down to prices that will find end users one way or the other. And that's the only thing that's debatable. What's the new low in bean? What's the new low? What's the new low in wheat? Wheat sure hasn't liked to spend any time in the 4 in futures at all. Spends all kinds of time there in the cash market, but it does not like futures in the 4s. So what are these new floors we established? I think $4 in corn We haven't been below that. Last March hit 397. I know that specifically intraday, and I think it closed about 4. Used to be 360 is where it used to go to. Before that, 314, 340. So you can see natural inflation's bringing some of these commodities up. So that's why probably you're just seeing these divergences where there's no liquidation to happen. These are cheap prices. I mean, we do use some of this stuff, a lot of it.
Yeah, absolutely. I was thinking while you were talking that we didn't even have crude oil on our list. And that one stands out to me as I had a client who was long last week, thankfully was out before any of the big moves. But man, that's a huge move. We're down like $12.
Yeah, and there's cattle to talk about. It's a market that's gotten just completely waxed. And this day was coming for cattle, and we have talked about it. The problem with investing in cattle is that when they look to get out, there's just simply too many people looking to get out a small market too quickly. And it's not like corn. Like corn's being bought probably by some end users on the way down because you can buy corn and you can store corn. Cattle, when the cattle's ready, it's ready. You can't store cattle. You can't buy cattle because you think it's a bargain as an end user and store it. Yes, you can buy it and get it delivered, but you can't buy it and store it. So what happens is this vacuum forms in cattle, and we've seen it before. Fundamentals don't matter one bit. As a matter of fact, this happened not long ago where cattle got at one point $21 under cash on heavy liquidation. And when it started, it had a couple pauses in there. It looked like that might be the dip to buy, but cattle's nasty. And when it starts selling off, it can continue to sell off. That's what makes that one of the more difficult markets to trade right now or hedge or do anything. It's just as easy as to stop going down as really continuing to sell off. And no one has the answer because it has nothing to do with cattle and has everything to do with investment funds, money flows, ins and outs. Like we talked about earlier, they take the winners, which has been cattle and gold. Those have been the two big investable markets where they were on the highs before this happened. That they sell their winners to pay for margin calls and their losers. And that's just the way it always works. Today, Bitcoin was definitely a part of that. Survived Friday somehow. And today got whacked because they need to raise margin capital. There's large margin calls all over the place right now.
I feel like I didn't look at the Bitcoin chart, but I thought I saw an alert come across that Bitcoin was back up earlier. But
yeah, back up.
I mean, not as far down as it was earlier. Let me put it.
Yeah,
that way.
and I think
I don't want to. Wait, quick aside, because that's something that stands out from this. I keep seeing, so then when people talk down and I complained about people using points and talking about down. Now I keep seeing people also saying, well, it was down 5% yesterday, but it's up 5% today. Okay, well, you didn't make all your gains back. No. If you were down 5% yesterday and made 5% back, you are not back to zero. You're not back flat.
Math often goes out the window with politics quite often.
Gosh.
On every level.
So.
People, you're just, I don't even know if most of these people are real on Twitter. Just some really terrible takes. It's my fault for reading it. I mean, I can't blame anybody but myself. It's just that you gotta, at night, just that doom scrolling, or in the morning, it's just like, what terrible thing happened today? And then you start scrolling and it's addictive. I got to break that habit. It's what you should be doing, like we started with, is looking for the opportunity in these markets. I think stay very positive. And I say that because the guys that do well in these markets, that's their attitude. They are probably happy the grain prices are going down, but they also embrace the market because they know there's nothing they can do about it.
Right. Yeah. All you can do is trade what's there in front of you now and take a look at what that can mean for the future. And I'm jumping back to crude oil. That market's getting interesting to me, to be honest. Like you talk about new floors. I'm not saying this is one, but I'm certainly watching this number to see what happens. Hey, I'm not going to catch a knife on it.
Do you know what the low is? The all-time low for crude oil is, Ryan?
Negative 25?
50.
Negative 50. I can't remember where it stopped.
Never forget.
Oh, I was sitting in your office while we watched that happen. I remember all kinds of guys saying 1 penny, let's buy 1 penny.
Let's
hold off.
One online guy tried to buy it at $3 and it got rejected. And that was probably one of the best rejections I've ever seen.
Oh my gosh.
What was it? Interactive Brokers. They didn't have it being able on their platform to register past zero. And so people couldn't even see it was negative. That's a whole nother story. That was interesting. Yeah. But yeah, crude oil in the past, things that have happened like this has gone to 35. And what I've known about crude oil is it's a market that doesn't usually bounce out of here real sharply. It's certainly capable of it, but it usually goes lower than people think it can go and it lasts longer. So we were just talking about the new floors. Yeah. What's the new floor for crude oil? I'm going to come up with an imaginary pulled from thin air number 47. That's the number I have.
I love it. 47 is the new. Well, I will say the crude oil, there was news prior to Liberation Day that OPEC Plus was pumping more and was increasing their output. And you added all the tariff news on top of it. There's still a lot negative on here.
Even before that, things were slowing down too. Crude oil has not acted well for a very long time. You've had 3 Middle East giant potential war that could spread very fast, involving Israel and others. And every time it jumped that night and ended by the morning lower, it's just not that it hasn't been the same crude oil for a very long time, really. So I think that has to do with a weakening world economy.
Yeah. Well, I mean, with crude, like wheat, there's so many factors.
Yes.
It's not just the weather. I mean, it's all the world politics that weigh into it. And
in past big downturns, crude oil has led the way. It has been the canary in the coal mine. It feels a little bit like that mixed in with a bunch of tariffs and a bunch of crazy stuff, but it just doesn't look good. It's not that old zippy crude oil at all.
Yeah, we did not talk about interest rates yet, John. I know you mentioned
we'll
interest
have to say
rates.
The next one. That's another market that I really like, because what happens in this stuff after it calms down is trends, like interest rate stuff trends really well. Lately, it's been tougher to tell what direction they're going to go with rates, but then policy gets put in place, and then it tends to trend for quite a while after that. Now, the trend has been bond prices higher, which means interest rates lower. And that's been a trend that's been going on quite a bit. I would say it's going to get quite choppy in there now with the debatable on rate cuts or no cuts and inflation, no inflation. But trends tend to form for quite a while in interest rates. It could be a pivotal time. But there is no clear thing. It's something that you should watch. And you also can spread interest rates. That's something I used to love to do in euro dollars, where you're selling the front, buying the back, buying the front, selling the back, depending on what you think the economic policy could be. So you can have a hedge position also in interest rates. But that's a whole nother episode. People have forgotten about the interest rate products because it went to like zero for 10 years and it was really boring.
Just sat there.
Yeah. And now it's not boring at all anymore. As a matter of fact, it might be a part of your hedging arsenal. If interest rates get low enough again, it's a hedgeable deal. And of course, that's something that a lot of people don't even know what's available to them or how to do it or how to approach it.
Yeah.
And you don't willy-nilly get in there. I mean, you're gonna want to know what you're doing. But
that would be there's a lot of tough markets to trade. That's one I wouldn't just throw money into for sure.
No, and but
it's not like buying one soybean option.
Deeply liquid markets. The short-term rates, the SOFR futures, you can go out 5 years, no problem. Banks and everybody uses this stuff every single day. Very heavily traded. The short-term rate stuff is the most traded commodity out there by far. And so it's really, I like it how black and white it is. Which way do you think interest rates are going to go? But what factors into it is the economy and many moving parts to cause policy one way or the other. But I do like the black and white nature of it. It looks really intimidating, but either you think interest rates are going to go up or you think they're going to go down. And that's why I like it, because I think you can look at things and like a stock, like a company, and really look at the fundamentals of stuff and then make a move in interest rates and make money. That's why I like it. It tends to trend really well when it does start trending. So far futures, that's a very nice size contract, $100,000. Sounds like it is a lot, but I mean, for a futures contract, the ticks aren't too overwhelming. Very good market to learn with. And then there's, obviously the option stuff. But that's a whole nother episode. I want to talk about interest rates. It does pertain a lot to the farm and hedging, a ton. As a matter of fact, it can locking in certain levels can influence huge amounts of dollars. So it's something that needs to be talked about.
Yeah, another one that we haven't mentioned in weeks that I do think is important. I don't want to dive in deep on this episode, and I know you did not prepare for it, so I don't expect you to either.
Ready.
You're always ready. Okay. Talk dollar.
I'm not ready. No,
I knew you were ready for that.
No, they're clearly pursuing a weak dollar policy, and that's code for we don't know what they're doing behind the scenes. But that is what they're going to be looking for. You don't want an out of control weak dollar, but you want a weaker dollar to be competitive in the export markets. It's really as simple as that. You want to find that balance, but they are clearly pursuing a weaker dollar policy. Because you can see it, you'd have heavy inflows into the sidelines, and normally the dollar would be going up now, and it's going down. I don't know what it did today, but it
ended up slightly today. But
they said they want a weak dollar. They're pursuing a weak dollar policy, and that's what's happening right now. But again, it's a balance. You don't want to have an out of control weak dollar, and they're also fighting inflation. So it's not an easy tightrope they're walking, but that for sure is what they're attempting to do. And now you're seeing China also retaliate. They just manipulate their currency right. to peg it within a percentage of our dollar, so the exports remain constant. So they'll be trying to lower theirs as well, even more to compete. But then that involves stimulus, all kinds of stuff. So quite interesting. But the U.S. dollar is coming down, which means hopefully better exports.
We'll see about that.
Yeah.
Yeah. Perfect. Anything else to add today, John?
Well, there's a lot to talk about. Hopefully, we wanted to get out useful stuff. You're going to hear, I'm sure everybody's just really tired of the hot takes. Maybe I look at them more than others, but I am. I'd rather have what can we do with this market to make things better? I mean, I think that's really what our job's about. And it's definitely time to go to work. The volatility I like. I think that people need to be really careful. But I think you also look for the opportunities, and I think there's going to be plenty out there. There always is when this stuff happens. My favorite one, I got one quick one. A client that's no longer with us. He was always a fun guy. Come in the office. He'd have his golf shorts on. He always had he just loved a hot trading tip. So he was often in stocks as well. I don't do stocks, but it was in the middle of the crash of 2008. There was a ETF, a basket, Southwestern banks, and it was at $1. And I said, Gary, it's like either it's going to be zero or it's obviously not going to be. And it's going to go up from here. And he had bought a bunch of that. And I think it eventually went to 17 fairly quickly after that, after everything got bailed out. But that was a perfect opportunity. You want to be looking for these opportunities. You also don't want to know what you're doing though, and not catch that falling knife. But I felt at $1, that ETF basket of banks, I figured they all weren't going to go out of business. And I don't think any of them did.
Yeah. I mean,
because there's no losers.
In 2008, for at least a little while, it looked like anyone could go out of business, and then
the government
manipulated our way out.
Yeah, the government came in and saved everything. Now look how wonderfully it's going now.
Yeah, it's amazing.
I like that. I like that these markets are getting back to normal markets that move back and forth. The news is debatable, but I also hope there's a lot of clarity on stuff so we can move forward out of this. I think there probably will be. But still, this did happen once before in my defense and other trade. I mean, this has happened, like this exact same thing.
And I don't want to downplay like what actually happens to people's 401k, over these last 2 days.
Yeah, that should be on their financial consultant. That's definitely not our job. I used to be one a long time ago and I didn't enjoy it. But they should have, you know what I mean? There was warning signs that stuff should be shifted around. If you're 70, you probably shouldn't have it in super high risk. But again, that's somebody else's job, and you should have a good financial consultant that hopefully can diversify you and protect you. That's what they say they always do.
Absolutely. Well, and like you said, that's not our job. So from a commodity perspective, this past week has been exciting to watch. It's not always good, right? But some people had very good weeks.
Oh, absolutely.
I mean, we know who we're talking about.
Yeah.
And so do they when they get the transfer.
Oh yeah. There's all kinds of good news in these markets, a lot of bad news, but we're born into this. This is what commodities is about. I mean, it's back and forth, high volatility. Russian-Ukraine war, I think, was a lot harder to trade than this. Every night you go to bed, one bomb in the wrong spot, everything's going to be limit up. But then you have poor fundamentals. Like those are really hard markets to trade. I feel like when they sell everything off, that it creates a lot easier opportunities than way higher markets. But that's just me. Everybody's different. Other people excel in super high overpriced markets.
Absolutely.
And it's just don't be negative. I would be positive, because if you're in commodities, you want to embrace this, and you're not going to change anything. That's the thing. If you want to change something, talk to your politicians, become a politician, change the laws. Complaining about it does absolutely nothing but waste energy, and you miss out on all the opportunities.
Right.
Or at least chances at the opportunities.
I read today if you did have 100,000 buy orders in the S&P today, you could have moved at 100 points.
Yeah, it was. I think they're going to break the volume record today. That thing was moving around in chunks.
Ooh. There was definitely money flowing around, which from the commodity side, when you watch that, you do know it has to come out of some things.
Yeah, and
go into others. Some people were sitting in cash, right? There's a lot of people who made a big deal about Warren Buffett having been in this huge amount of cash, and he must have known something. He had inside information.
Yeah, why don't you follow Warren?
Telling people he was going into cash for months, and people were making fun of him. Yeah. And now they're saying he had inside info. It's like, that's the news. Just going back to that, man, that is frustrating to read.
Yeah, I just think that people haven't seen this look in a long time. This is not an uncommon thing. Everything's gotten so political. It's exhausting on that front. And then you get all your political hot takes with the markets. It's really just a distraction. You shouldn't be concentrating on that. Again, you're not going to change anything. And if you want to, become a politician. And then you can talk about it.
No one wants to do that.
You can talk about it all day long, and then you can tell your friends about your politics. That, have fun with that. But for trading, it doesn't mix well, and I just wouldn't include it. Others would argue that politics influences price direction heavily. It does. But once you see that, then look for the opportunities. What I'm saying is you're not going to change the politics. Right. At least short term, you're not going to. And you have to just deal with what you have. Just kind of like the USDA. You might not like how it works, but it is the current system, and you're better off embracing it than fighting it.
Embracing it's pretty strong, John.
Yeah, that is a really strong word for that.
You're better off understanding you need to just say, nod your head.
Comply with it is better word.
Comply, yes.
You will comply and not complain. But it is what the system is, and you can try to change it. You start knocking on doors and run for office. Get the changes. That's how you get stuff done. On that side, not complaining about it all day on Twitter. Why am I complaining about on Twitter? Now I'm turning into one of them.
Let's just enjoy this opportunity that we have and encourage others to look for these opportunities.
Yeah, and they're not always obvious. But my favorite, and I'll leave you with this, is that just wait till it all goes to where it goes. Generally, even after it starts moving the other direction, there's strategies that you can do. Like the wheat corn spread that I'm following, I might not get the low, but I might wait for it to calm down, and it might be 15 cents off the low. I don't want to catch a falling knife, but just, you're just looking for different turns in the market. Like corn, we talked a lot about today. Now I'm looking at strategies that match that. And again, it's going to be different for one guy to the next. But My advice to you is, again, don't get distracted and look for the opportunities. Ask, call me, and we'll tell you exactly what we're looking at.
Absolutely. Well, John, should we wrap it up there?
Yeah, that was a long one, for sure. It's long Monday. It's been long every day, but but this is what commodities is about. And
we can't fish yet anyway. So.
Yeah, we can't fish yet. Yeah, you're gonna see shorter episodes when we can fish.
That's right.
Yeah, you're gonna short and sweet, and you'll probably like those better. But yeah, the ice is still in the lake, but it's really close to melting. So we have that to look forward to. But yeah, no, just give me a call, 218-731-1578, and let us know. We've had some great feedback from people, and we are ever evolving the shows. We're looking for more guests. If you have any ideas on that, or just anything you want to hear, topics, drop us an email or call us, text us, and we'll get it in the show.
Absolutely. Well, thanks, John.
Yep. Bye. Yeah, you have to realize a lot of these people have not ever even seen a down market, really. Bitcoin, I mean, there's been ups and downs, but they have not seen what a market is capable of doing. They're used to this just go up every day or most every day.